to help us explore especially the impact of this haircut and the options available to you out there, and also to government as it seeks to engage more, even after saying that there are no options available for further engagement on this. Joining me in studio now is Professor Elikplim Abloyo. He's actually from the finance department at the University of Ghana Business School. I'll be joined in the course of this conversation by a senior fellow of the Institute for Fiscal Studies, Dr. Saeed Boache. And we'll also be having a conversation with that distinguished professor from the Institute for Statistical, Social, and Economic Research, Professor Charles Acquah, in the course of the conversation. But let me welcome Prof. You're welcome, sir.
Thank you, Raymond.
I hope you are doing well.
I am.
The last time we had a conversation,
yes,
you made it pretty clear that we need to do some form of debt restructuring before we get an IMF program.
Yes.
In fact, you moved it ahead and gave us the three main options available to the government for debt restructuring.
Yeah.
And these three main options, you told us the pros and cons of each of these options, and moved it a step further by saying that some of them are more costlier than the other.
Yeah.
Now, let's start from what has happened now.
Okay.
This domestic debt exchange program, which of the options of debt restructuring does it fall under? What does it say about our current state? And to your mind, is it the best option we chose?
Okay, thank you. So, yeah, there are three main options in doing a debt restructuring, like we discussed the other time. So, number one is that the government or the obligor could extend the maturity of his debt. So that's option number one. So, for example, if your debt has 5 years remaining to maturity, it could be extended to, let's say, 15 years.
Okay.
So that's what we call the maturity extension. Then number two is the reduction in the coupon or interest payment. So if the government was paying you, let's say, 19%, they come and say they'll pay you. So we are seeing that they want to pay 0% in 2023, 5% in 2024, and then thereafter they pay 10%. So there's a reduction in the coupon payments to investors. So what they have done, or the options they are using, are one, maturity extensions, and combining that with the reduction in coupon payments.
So let's understand this. They didn't choose one of the three main options available here.
Yes.
They chose two.
They chose two. Yeah. And then they didn't do the principal haircut. So to a certain extent, the president was right when he said that there will be no haircuts. What the principal haircut means is that if your principal is 1,000 cedis, they will pay you back 700. So you're going to lose 300 out of your principal. So technically, they haven't done a haircut, but people argue that once you're losing money, it's a haircut.
Okay. Now, we'll break.
So that's an implicit.
Okay. Very good, because that's also come up, actually. We'll get into that kind. Now, first, the options they chose, and the option that we have currently on our table, they've told us a lot of things about this option.
Yeah.
They told us who is included and who is not included.
Yes.
In fact, they've extended it a little bit further into saying that what they call some individual or natural, what they call it, persons.
Yeah.
Explain to us what are the pros and cons of the options chosen today.
Okay, thank you very much. So if you remember the paper we wrote at Tessa Capital, we argued that they should exclude individuals. And they have done that. If they hadn't, it would have destroyed the balance sheets of individuals. Some people have taken loans using their treasury bonds as collateral. So if the government doesn't pay them, for example, they'll struggle to repay their loans. Okay, so it's comforting that they have excluded individuals from this process, at least directly. Okay, so once you hold bonds in a government instrument as an individual, that would not be affected. Number two, they have excluded treasury bills, and I think that is very important. If you would notice, even in the midst of the debt restructuring, we've seen an increase in treasury bill subscription. Okay, and what that means is that at least the government is assured of short-term funding. If they hadn't done that, they will struggle to even raise funding to keep running the country. So again, as we expected, they have excluded treasury bills. I think that is good. that assures that we can raise short-term funding to keep the country running.
So that's where they would have got, they'll get money to continue with their, what they call it. So that's why they excluded that. There is some conversation about the individual part. The distinction that people make is that, I mean, the individuals who really are direct participants in some of this space are not the ordinary people. We're talking about very rich people because it takes a lot to get into that category of people.
That's true.
So the chunk of the ordinary people are rather with the collective schemes.
Investment schemes. I think that's a very valid point. If you want to buy bonds, you need some substantial amount of money. So for example, I dealt with a bank, I won't mention their name. They said you need a minimum of 500,000 cedis to be able to buy bonds from them. Okay, so most individuals will not be able to do that. They would invest through a mutual fund or a collective investment scheme. And at this stage, we are not sure whether these schemes will be affected by the process that is ongoing.
Really? It's not categorically stated?
I think it's not categorically stated. So if you had listened to the press conference, the gentleman from the Ministry of Finance, in response to the question from the gentleman from Reuters, that a lot of people hold their investments indirectly. Or let me be more specific, a lot of individuals hold their investments indirectly through collective investment schemes. And if these schemes are not excluded, then obviously they'll be affected by a reduction in their monies.
Now,
and the response was that they will come up with further details.
I have seen a statement coming from the Fiscal Stability Council.
Okay.
The conclusion of the statement is that in keeping with its mandate, the Fiscal Stability Council will continue to closely monitor the impact of the debt exchange on financial institutions and the financial system as a whole, as well as the effectiveness of the measures outlined above. These measures will be reviewed continuously and recalibrated as needed to ensure maximum effectiveness to safeguard, and that's what it says here, the stability of our financial system. And also it brings in the protection of deposits, pensions, policy holders' funds, and investor funds and assets. I want you to put it on hold for a second. Now, one of the things that I thought we should do quickly on this is basically go through first, these finance houses and asset management firms, how would they be affected?
Okay, so first of all, there are two distinctions of assets that some of these institutions would hold. So number one is that they would hold assets for their own account or for what we call proprietary trading. So these assets belong to, if it's a bank, it's in the name of the bank. That asset belongs to the bank. It's not held on behalf of, let me say, a client. Okay, so in that respect, if there's a loss on that instrument, that would affect the bank's capital or the financial institution's capital. But I think what people are more interested in are investments that are held on behalf of investors. And if these institutions are forced to take this debt exchange, the value on the investments may reduce. It's very likely that they will reduce, given that, I wouldn't be too technical, but one, their coupon payments have been reduced. Okay, so when we call it discounting, when you discount those cash flows and bring them into today's money, the actual value is lower.
Okay.
And that calculation can easily be done based on the coupons that the banks end up taking. They will know how much they're going to lose by accepting this offer.
Now, when we are told that zero interest 2023, what does it mean?
Okay, so typically when you own a bond, okay, the bond makes two payments in a year. We call it semi-annual payments. So if you hold a bond, for example, you'll be paid in June and then in December. Okay, so if the coupon on the bond is, let me say, 20%, and you invested 1,000 cedis, okay, that means that in a year you are entitled to 200 cedis. Okay, and that 200 cedis will be paid to you in two equal installments. So in the first 6 months, or let's say in June, you receive 100 cedis, and then in December you receive another 100 cedis. But when the coupon is now zero, it means that throughout the year you don't get anything.
Okay.
In terms of interest payments.
So if, let's say, I gave my money to Data Bank for them to invest, I shouldn't expect anything next year.
So that's a collective investment scheme.
Yeah.
Yes.
So I shouldn't expect anything next year.
Okay, so the way these CISs work is that they don't usually pay interest to investors in Ghana. In other jurisdictions like in the US, if you hold a fixed income fund, they will pay you income. In Ghana, they don't.
Yeah.
They keep the money and reinvest.
Okay.
So if you are going for your money, what it may mean is that the value of the investments would have fallen.
Okay.
And you're going to get lower, or you're going to lose some money when you go for your funds.
So let's say the grouping that we're talking about, the financial institution here,
Yes.
will they, in all fairness, be able to run with the kind of structure that they've been given?
Well, I think if you ask me personally, I think that the structure that was announced was worse than I expected. We knew that we had to do a restructuring, but it was worse than I expected. And number two, I think that the government hasn't given us enough information. And there's still an informational deficit. Okay? And what I mean by that is that how much debt will be sustainable? How many bondholders need to accept the offer for the debt issue to be sustainable? What level of debt to GDP are we looking at after this process?
It's not the 55% we talked about, or some say 60, some say we cannot even get to the 55%.
The 55%, if I heard correctly, is in 2028.
Yes.
But what's the immediate impact of this debt restructuring? Okay, so currently our debt is about 75% of GDP. If you add the SOEs, etc., it balloons to about 100% of GDP. Okay, to what level will this debt fall if the debt restructuring is successful? We don't know. And I think that has not been clear.
But will they have an impact on it?
Depending on the extent of acceptance by investors, because currently, based on the Attorney General's advice, it looks like they've decided to go for a voluntary route where people will have to voluntarily accept the new bonds. If the acceptance is low, the restructuring will not be successful.
Okay, now give me a second. Professor Charles Saka is joining us via phone. I want to actually hear some thoughts from him and come back in studio as I engage consistently also from the University of Ghana Business School. But Prof, you're welcome to UPfront. I hope you are doing well this evening.
Yes, good evening. I'm fine by God's grace.
You have advised government before that I remember you consistently said you asked government to, during COVID, use up its available funds because the money was needed to be done. In fact, your exact words were whether or not we should print money and use it or something like that. The current domestic debt exchange program, do you think it is a very wonderful program for, first and foremost, the revival or debt sustainability we require, and more importantly, for the impact that's likely to have on not only the players in the industry, but people of this republic?
Yeah, Raymond, thank you very much for the privilege, and good evening to the cherished listeners. I think we are in a very difficult time, and we need to be quite innovative and very careful, very, very careful with the kind of steps we take. And I don't think that the approach that the Minister of Finance is using for this debt restructuring is a fair and a very sustainable one. I can understand that the IMF is the one instigating it. They did it in Jamaica, and I think they want to use Jamaica as a model. But our situation is totally different from Jamaica. And I don't think even the Jamaican experience is a textbook case that we should follow, because what happened in Jamaica was actually very bad. The social cost of that debt restructuring program was terrible. Unemployment increased significantly. Poverty increased significantly. There was a lot of social cost. And I don't think we want to go along that line. I think that we will need to look at the debt situation and look at what we can do to avoid grounding the economy totally and avoid any political security risk that may be associated with it. I want you to go back to the history of Ghana. If you go back a little bit to the days of Busia, Prime Minister Busia, and I think Busia has a tradition with the NCP, you will find out why Busia was overthrown from government. And you will know that it was the same IMF program that Busia, when he came to power, the Ghana was totally indebted and was mainly external debt. And whilst he could not pay that debt, he went into an IMF program that was very serious austerity. Wages were cut, was freed, employment was freed, taxes were raised, and there was a lot of demonstration and protest across Accra in the country, and that led to the overthrow. I'm not hoping that will happen today, but I don't think we should push ourselves to the wall, and IMF will not be here if fire breaks into the country. I think it's not the most sensible option for me. We need to look at the central bank and redefine the role of the central bank. When we studied economics, we were told that the central bank is a lender of last resort, which then means that if the central bank has not been handcuffed and the IMF has not told the central bank to do zero financing of government, and that's what you see in the budget, 2023 budget. For the next 4 or 5 years, you see zero financing, central bank. The central bank has been told not to finance government expenditure, even in a time of crisis like that. I think that's unfair. It's totally unjust. A central bank is a bank of the government, is a lender of last resort. When a country is on its knees and a country cannot pay its debt and government cannot pay wages and salaries and pay contractors who have done genuine work, when people have invested and the fund managers cannot pay people's principal and their interest, the central bank must come in and bail out those fund managers and those financial institutions. It must not sit down for the financial system to totally collapse, for people to lose their investment, their working capital, and then for us to ground totally and to go back to an IMF again in another 3 or 5 years. I think that is not the way central bank is supposed to function. The only risk to central bank financing, or what we call monetary financing, is inflation. That's the only risk. That if the central bank prints too much money and it cannot be controlled, it will lead to inflation. That's the only risk. Apart from that, it is far better than the approach we are going. And we can control inflation. We can print, or we can ask the central bank to create money to bail out the government. Basically, what I'm saying is that if we are going for debt restructuring, we should go for a debt swap, where the central bank basically pays off or buys all the debt that are due next year, 2023. The bonds that government is supposed to pay, the central bank can absorb it. And then when the central bank absorbs it, it pays those bondholders their money. And the central bank now can decide to restructure that debt for maybe another 5 years or 10 years, either at no interest with grace period or at some interest for a long time, and give the government a more fiscal space to be able to recover. That's the approach I would propose to government.
Prof, we have been told consistently that the central bank itself is struggling to raise money. In fact, in one of the very detailed presentations that the finance minister did before Parliament, he talked about we, even at the central bank, having its reserves reducing at a very alarming rate. He also talked about we struggling to raise the needed foreign exchange to be able to do imports and all of the others. Is this proposal that the central bank should print money to bail out government a very feasible one, and one which will not plunge the economy into dangerous times?
It shouldn't. There are two things that the central bank does. Every sovereign central bank, Bank of Japan, and I want you to go and look at the Bank of Japan. The Bank of Japan, all the debt that Japan owes, Japan's debt to GDP is more than 200%. They have borrowed more than twice their GDP. But you will see that more than 100% of that is owed to its central bank. It's money that the central bank has used to buy Japanese bonds, government bonds. The same approach is followed by South Korea, Malaysia, and many of the countries. Even the U.S. The U.S. debt to GDP is more than 100%, and most of it is owed to the Fed. When Obama came and there was global financial crisis in 2008, Obama increased the U.S. debt by more than 60%, and most of it was financed by the Fed. During this COVID, all the central banks that began to do something all over the world, they call upon their central bank to finance it. Now, what I want you to know that there's no central bank in the world that can run out of its own local currency. because only the central bank of the country has the authority by the constitution to print money. You cannot print cedis. I cannot print cedis. The US cannot give Ghana cedis. IMF cannot give Ghana cedis. Any cedi you see roaming in the country Ghana must come from the central bank. Otherwise, it's not legal tender. So to say that the central bank is broke is to say that we have run out of cedis, and there's no way we can run out of cedis in the country. What the central bank can run out of is foreign reserve, because we don't create dollars here. We only get dollars from export, net export, or from foreign direct investment, or from what? Borrowing or aid. So if we don't have enough export, and we are importing too much, and our net export is zero, or we are running a current account deficit, and we don't have enough foreign direct investment or remittance, or we are not being able to borrow because we are shut out from the international capital market, your reserves can run down, and that's what the central bank is facing. That's a different issue. The issue about how do we deal with our external debt is something we can discuss later. But when it comes to the domestic debt, I don't think this is the approach we should go, because that one can be handled by the central bank.
Now, one other point, though, is that all of this is to get a blessing and a program from the IMF. I mean, at some point, we basically are in a very tight corner because they might be indirectly dictating to us on this matter. Can we call their bluff? Can we say we don't like what you used in Jamaica and we would like to take a different direction to all of this?
We actually, to be honest with you, that would have been my first proposal to government. If government is willing to engage and to really look at our debt profile very well, you would have realized that we don't actually need the IMF. I am of a very strong belief that we can do without the IMF, and if we are willing to accommodate some economic, some economic thinking. You will see that we can service our debt in terms of the interest payment without going to IMF. It's when the bond actually fails in terms of amortization, which is not going to happen until about 2025, 2026 or so. None of our external debt or Eurobond is coming due in 2023 or 2024, unless I'm getting something wrong. So basically what we are being called upon to do is to service the interest payment. And if you look at what is happening to our export, you can see that the export is growing very quickly, especially because of our exchange rate that has depreciated. Check the budget, or check the Bank of Ghana statistics. Export. So if we are able to invest in exporting more, we could actually, over the next 2-3 years, finance some of the external debt that are going to be due. Now, during the Asian financial crisis that came around 1997, 98, 99, many Asian countries went to IMF. There's one country that I want Ghana to study, and if I have time, I may write a story about that country. And that country is Malaysia. Malaysia refused the IMF. They called the bluff of the IMF. And throughout the history, Malaysia got independence in the same year Ghana got independence, 1957. At the time, Ghana and Malaysia were having almost a similar GDP per capita. Malaysia now has grown to become an upper middle income country. Their GDP per capita now is about $11,000 per person, while Ghana is still hovering around 2,450. Yeah. Now, and Malaysia has not gone to the IMF program almost since they took independence. They have decided to go by homegrown policy. Now, why didn't Malaysia go to the IMF? They thought that the IMF austerity was too strict and was going to cause more damage, more harm than good. So they decided to do certain things. The first thing they did was to decide to call upon the Central Bank of Malaysia to assist. The next thing they did was to stop or to introduce quantitative or administrative controls to capital flight. What has happened over the last 1 year is that we have sat down for almost $5 billion to be withdrawn out of this country. And that's what has reduced look at the fall in the reserve. If the central bank was quick enough, the Minister of Finance was quick enough, and they decided that we are going to bring in some controls to either appeal or to restrict administratively the outflow and the capital flight, the people's withdrawal away, would have had our reserves at a sustainable level. Malaysia did it, and they were able to stop capital flight from going. So they kept the dollars within the Malaysia economy. and then they use their central bank to assist and some controls to pay off their domestic debt. And within a year or two, they were out. They have not gone to the IMF. So if we decide not to go to the IMF, we could use some of the Malaysia wisdom. But if we want to go to IMF, we can still do, but we need to negotiate properly with them that this debt swap or debt exchange approach is totally unfair, grossly immoral, it's very dangerous, and it's going to cause more harm than good. So we could actually discuss with IMF to allow us space to call upon our central bank to assist and to be able to reduce the interest rate. Mind you, one other thing that is causing problems for the government is the continuous increase in the interest rate. It's making the government domestic debt too expensive. And it's because we are chasing an illusion that we are trying to control inflation by increasing the policy rate. And by doing that, we have increased the policy rate by more than 1,000 basis points, 1,250 basis points within 1 year, from about 12.5% to about 27%. So that has increased the government borrowing. And if you look at the budget, government borrowing on domestic debt is going up astronomically. That needs to be controlled. Once you increase that debt, it becomes more difficult for government to finance. If we decide to bring the interest rate down, because that's not the only way to fight inflation, and it's not really working, in my view, it's not working. It's making things too tight for the whole economy. The interest rate must begin to come down gradually, and that will reduce the government's burden on its domestic debt. And then we can now begin to increase our export quickly, because we're already growing. Let government invest in some of the exporting areas so that we can get more export to be able to pay our external interest payments that are becoming due in 2023, 2024. If we do that, I think with or without IMF, we are not in a very terrible situation, because our GDP, debt to GDP per capita ratio has not even gone to the level where Jamaica was. And I don't think we need to get there. We need to control things. So I think that we need to have more engagement. Let's talk more with academia. Let's talk more with, sit on the round table. Let's have a bipartisan discussion on what is the future of Ghana that we want to have.
I get your point. It appears government is unwilling to do that kind of conversation. Even though it says this is a voluntary form of engagement, it also says you're on your own. If you reject it, you are staring straight in the face of default. That's what government's been telling those who want to actually buy into this particular program. Step in the right direction?
Well, I don't know, to be honest with you. I think government needs to really slow down and discuss, because we are in this economy together. And the situation in this country is quite difficult. If you look at the statistics, my brother, you will see that unemployment is increasing. Graduate unemployment in particular has gone to almost 36%. Those that are within the ages of about 24, thereabout. They are the future of this country. They constitute almost half of the population. Okay, there's a lot of challenges going on. Look at the price of goods and services. Look at producer price index, more than 65%. Consumer price index, more than 40%. Look at the interest rate, getting to 40%. Look at the dollar depreciation. So things are hard for households, things are hard for individuals, things are hard for companies first, and I believe things are also beginning to hard for the government. So I think we are in it together, and we want to help. Nobody is an enemy of this country. I've been working as a researcher for this country for all these years. At ISA, we do research, we advise. So I think this is the time that we need to sit down, whether it's another century or whatever it is. The academia must be consulted, all the political parties, let's sit down. Let's not get a few people to be talking to the IMF and then just think that whatever IMF suggests is sacrosanct. I don't believe in that. And I think we need to try to guard the security and the future of this country.
The very last question I have for you is the question about what we do with the expenditure patterns of the state. And many say that even if they are not willing to take your advice, at least government should have shown a lot more interest in cutting back on its own expenditure pattern, right from the size of government through to the other things that it does, which really makes it big.
Yeah, well, I disagree with some of those calls because, again, what those people are asking for is austerity. This is not a time for austerity. A time like this in all countries is when you need more spending from the private sector or from the consumer households. And if more spending is going to come because you want to keep growth at a very decent level to protect employment, and you want the government also to spend on some critical consumption expenditures and some critical investments, CAPEX especially. And you want government to keep social protection also going. So we should not, in the panic, call for too much cut austerity. It will make things worse. What I agree with people is that people think that the size of the government is too much. And I have complained about that since 2016. And I think we could do with about half or so of the current ministers and political appointees that we have. I agree with those people who say that government must show an example of cutting down the size of its government. The size of the government is not the expenditure. The size of the government that people are talking about is the number of appointees and things we can look at. I also agree with people that say that let's look at some of the government flagship programs that are not really efficient and productive. I agree with that. So I think we need to look within the basket of government expenditure and agree on which ones we can afford to suspend, which ones are actually unnecessary, which ones are actually socially unjustified or socially even wrong. We can decide to debate. I don't agree on the blanket, cut your side. I think we need to be careful and pick and choose. That's basically what I would say about that.
I am grateful to you, Professor Charles Acquah, and in due time, we sure should be having more conversations on this. And I'm sure your issue you've raised will be tested along the table for a broader conversation on it. But thank you so much, Prof, for taking time to speak to us. Professor Charles Acquah is at the Economic Division at the Institute for Statistical, Social and Economic Research. He's been there for quite a while. And in studio is Professor Abloyo. We started the conversation about the impact on all of these. In fact, because Prof jumped straight into the very options on the table, what else we could do differently, I will not go straight to the point. I will come back a little bit to what we're actually having the conversation. So we left this conversation at the point where you were telling us the impact on the financial institutions. If you could quickly lump that together with the other areas like on insurance companies, on brokerage firms, and maybe the conversation about pensions and the other groups quickly.
Okay, so we're in a very difficult situation.
Okay.
And I think the context is important. Our debt service alone is a huge proportion of government revenue, about 70%. Okay, so the government is actually struggling to repay its debt. It has become obvious that the restructuring is necessary. But like I said earlier, I think the government needs to provide a bit more information. So for example, even in terms of the financial institutions, okay, what will be the impact of this debt exchange on their balance sheets? Okay, I believe they've done some stress tests to
that's what at least the fiscal stability group is saying,
Okay, so they should publish the results of these stress tests. Okay, at least if they are not going to identify individual banks or individual insurance companies or institutions, at an aggregate level, they should publish the results of the stress test. That will, for example, give confidence to people about, okay, if my money is in the bank, it's safe. I don't need to go and withdraw my funds.
Now, I'll ask you that question in another way, but this document from the Fiscal Stability Council states that the stress tests have been conducted by the relevant financial sector regulators to estimate the potential impact of the debt exchange for banks, specialized deposit-taking institutions, insurance firms, asset managers, collective investment schemes, pension fund trustees, and regulated pension schemes that could result from their participation in the debt exchange. That's actually what they have done. But I understand I've been joined by a senior research fellow at the Institute for Fiscal Studies, Dr. Said Boache. Doc, you're welcome to UPfront. If you can hear me, Dr. Boache, you're welcome to UPfront.
Yeah, thank you. How are you guys doing?
We are doing very well. Let me start from this point. Already, I just left a conversation with Professor Charles Acquah, who is outrightly opposed to the current domestic debt exchange program. He believes that it's going to bring untold hardship on the people, a lot more poverty, and unemployment is also going to worsen. He thinks in the alternative, we should get the Bank of Ghana to be the lender of last resort, and play a more innovative role in helping rescue the system. If I got him right, one of the proposals he's given is that since this is domestic debt, we should speak to the IMF and find our alternative solution. The Jamaican model we are implementing in the Republic of Ghana would not work. From where you sit, is there a counter proposal worth considering?
Thank you very much. Indeed, I must be frank with you. IFS is perhaps the first institution outside government that recommended that there should be a form of debt restructuring. The reason is that where Ghana debt stands and its implication for debt service, and if you add compensation and other expenditures, it's so difficult for the government to be able to continue to move on. So we have recommended debt restructuring. But the problem is that we didn't think that the government should approach the whole thing in the manner it is approaching it. You see, of course, let me tell you that as a Muslim, we don't deal in interest. But you have already issued bonds. And those who have purchased the bonds, you are credited. You have entered into a contract with them. So this contract has two parties. And if one party wants changes in that contract, that party cannot just go ahead and make changes and tell the other party, these are the changes I'm making. It needs negotiation, a very serious negotiation with the bondholders and their stakeholders for an agreement to take place. Afterwards, then the government will have announced it. You know, yes, we need debt restructuring, but the way they are approaching it is unconventional. You cannot just impose anything upon the people. Of course, if the people fail, there could be consequences, as the government is saying, but still, you may be the government, you do not just impose. Because suppose this restructuring takes place, as you have planned, you will still need those bondholders, those investors going forward. They will have to help you fund your budget, finance your budget. And if you treat them so badly, in the future, can you get back and sell to them? So I believe that, yes, that restructuring is needed. A Bank of Ghana coming in perhaps will be adding more debt because, Bank of Ghana does not provide free money. It also lends, but at, lower interest rates. The way the debt has reached and repayment is, there should be some debt restructuring. There should be some haircut. But it should come as a result of a deliberate consultation, deliberate renegotiation with the bondholder.
But now, what government's basically telling us is that, you're on your own if you don't agree to this one. So there isn't really room for any form of negotiation now, as is pretty much the case. Even though they say it's voluntary, if you don't take it, you are in bigger trouble. In fact, the presumption is that if we don't pursue this path, we are going to be in a bigger financial and economic crisis that we are currently in. So there is no alternative on the table. Do you agree?
I don't. Yes, a form of debt restructuring is needed as a complement to the government-owned efficient fiscal management. You see, what sent this country to the level you are in, I don't see the government changing anything. It is excessive spending, leading to overborrowing, leading to our inability to service our debt. And the credit agencies, the rating agencies, have noticed that and they have downgraded that. The government keeps on saying it is Russia, Ukraine, COVID. The truth of the matter is that it is not true. Let me be plain with the government. In fact, at IFS, we have done an estimate, and we have come up with the conclusion that over 80% of the problems we are in, of course, Russia, Ukraine have added something small, but over 80% is our own making. Poor fiscal management, leading to excessive expenditure and borrowing, is what has landed up here. That rating agencies have recognized that, hey, look at these people. They don't have revenue to support their expenditure. That is what has landed us over here. In fact, I sent a video to your producer. I don't know if you have shared such videos with people like that. As far back as September 2021, I had predicted that the economy of Ghana was going to crash through the fiscal sector because the rating agencies were about to downgrade us. I said it. And after the downgrade, the macroeconomic instability will pick up. You understand? So it's not Russia, Ukraine. But the problem is that the government continues to pursue the same fiscal strategy that has landed the country over here. Look at the 2023 budget. In fact, I will even look at the 2022 budget first. In the media, they projected to the deficit ratio to be 6.6%, around 39 billion Ghana cedis. We at IFS look at it, And he said, no, this is excessive. The government has to pursue serious fiscal consolidation by cutting certain unnecessary expenditure. Now, our 2022 budget, that is now projected. When they brought the 2023 budget, the deficit has rather increased from 6.6% to 7.2%. In nominal terms, over 44 billion, from 39 billion to over 44 billion. What about 2023 budget? The deficit is increasing to about 61 billion, and in terms of GDP, it's 7.7 billion, 7.7%, increasing further. Why? The government does not want to touch expenditure, so the overborrowing is going to continue. You do not address the current situation that you are in like this. Yes, debt restructuring is needed as a supplement to government effective and prudent fiscal management. So when the government says, the country is crashing, yes, it could crash because the government is not changing in terms of the way they are managing this the economy fiscally.
What should we cut? Maybe the last question I'm asking you.
What should we cut?
Yeah.
Have people not be complaining about Article 71 office holders and they continue to enjoy their benefits? Go to the ministries. You see list of cars with drivers sitting down over the waiting to move. These officers who use public cars, they're driving anyhow because it's not their personal property. When the cars get spoiled, they are sent to workshop and they charge exorbitant prices. You understand?
I get
now,
you, sir.
People have been complaining politically that so many ministries now, nothing is taking place in terms of change. And if you are not changing, and you are charging people, pensions and others, in such an aggressive fashion without negotiation, serious negotiation and understanding, I think it's inappropriate.
Doc, I am grateful for your time this evening. And Dr. Said Boakye is with the Institute for Fiscal Studies there and also sharing some thoughts on where we should be tackling rather. He feels is the expenditure that is the problem. And that if we still continue with this program, we should surely be having a conversation on touching the expenditure. In fact, he believes in Article 71 and up. So generally, we are getting to the point where it's pretty obvious where the lines are drawing.
Yeah.
For Professor Acquah, you surely should rethink and be innovative about all of these.
Yeah, I agree.
For the side of Dr. Said Boakye, even though you are forcing it down the throat of the people, you can't do this the way you are doing it.
Yeah.
You need to be a bit more engaging. That's what he's saying.
Yeah.
And again, he's stressing the point that government is pretending it cannot touch expenditure and that it should be able to do so.
Yeah.
If you are asked to review these options and say which one is the way forward, who do you agree with? Or which third option will you present?
Okay, so I agree that there should have been a bit more consultation before this program was announced. And if there had been that prior consultation, you'd have a bit more buy-in. You have a lot of people complaining that the pension funds, I've heard the doctors, the nurses, so many people are complaining. So if they are probably...
Are those real that those funds will be affected?
They have real concerns, yeah.
They are legitimate claims.
They are legitimate claims. Because if you take that deal, that means you are going to lose some money. But the government claims that in the alternative, if you don't, things will get worse.
Okay.
Okay, but what...
But is it true?
I think that the researching could have been done in a different way. Of course, I don't have the full information or numbers. But for example, if we had done debt reprofiling, okay, in the sense that instead of not paying the interest, you can maintain the interest rate, but extend the maturities. So that's one option. That gives you a little bit more or some flexibility.
Okay.
Okay. Number two, what I would have also probably done is that you could pay some of the interest payments now, defer the rest, and still apply some interest on it. I don't know if you get what I'm saying.
I get your point.
So if I was supposed to pay you 200 cedis, so I'll pay you 100 cedis, defer the 100, but that 100 I'll pay you back sometime later in the future with interest. Of course, the implication of all this is that it still has an impact on the value of your debt. And as of now, we don't know the full impact that the government estimates, even for the current proposal they have given.
So that's a key point, right? It's the end in sight.
Yeah.
What you really want to achieve, that will determine the kind of tool you deploy.
Exactly.
So if we do not know what percentage you want to reduce your debt by, you really may not be in the position to know the exact tool that will be more appropriate
Exactly.
at this time.
Exactly. And even if people then know that this is maybe, this is our only option now, it's easier for them to accept.
Okay.
But as of now, I would say that we have not come to that realization that this is the best option available on the table.
Now, there's another conversation about whether or not all the groups we are told will not, because I am going through the very document that's been put out by the Fiscal Stability Council. It says there's a Ghana Fiscal Stability Fund to be established with a target size of 15 billion to be provided by the government of Ghana and its development fund. In fact, partnership, The fund will provide liquidity to financial institutions that participate fully in the debt exchange. All financial institutions, banks, SDIs, pension schemes, collective investment schemes, fund managers, brokers, and insurance firms that fully participate in the debt exchange can access the augmented liquidity support with effect from the date of completion of the debt exchange. Is this enough cushioning to avoid the fears about collapse, avoid the fears about massive, what they call it, societal unrest due to the kind of poverty and all the other things that follow due?
The answer is, I don't know. And I'll tell you why. Okay. I haven't seen the results of the stress test. We don't know. So, for example, if the financial institutions are going to lose about 30 billion, then 15 billion is not sufficient.
Okay, that's interesting.
Okay. So we don't know the scale of the loss that these institutions would suffer, and consequently, what the size of the financial stability fund needs to be to ensure that they can still cushion these banks in the event that they go for the debt exchange.
So it's absolutely crucial they share with us the documents on the stress test and the estimation of the loss that's going to happen within the space.
I think so.
That's when we will be able to determine whether the 15 billion we are setting aside will be enough for it.
You see, in crisis periods, even if this is the best option available to us as a country, in crisis periods, you want to communicate more, not less.
Okay.
Even if it's bad news, it's important that people know so that they can process that information and do their own calculations to see the impact.
Okay.
But if there's not enough information, that leads to more problems. Okay, so I think that there should be more communication as to where we actually are, the implications of the options that we are taking. That provides more confidence to market participants, not less. Because if you have scarcity of information, what we call information asymmetry, it leads to a misfunctioning of markets. It could even lead to panic runs on banks and these investment institutions, etc. And it will interest you to know that this year's Nobel Prize in Economics was awarded to Diamond, DeVick, and Ben Bernanke. And their work is about what we are seeing now, financial crisis.
Okay.
So you need to communicate more to build market confidence. If you communicate more and people have more information, they won't be running to the banks to withdraw their funds.
But that sounds familiar. Is it the U.S. former? I mean, here.
Federal Reserve Chairman.
Yes.
Okay. A bank will survive in the long run if everybody doesn't go for their money now.
Okay.
But if we all rush for our money, the bank will collapse. That's what we call a bank run.
There's a question that's on the minds of many people. What do I do with my investment? Which is with the collective investment scheme.
Yeah. This is a very tricky question. I don't even know how to answer. Okay, the truth of the matter is that if everybody goes for their money now, these institutions will not survive. They will collapse. So what I would say is that if you don't need your money urgently, don't go for it.
Okay.
Okay, that is good for you in the long term, and that is also good for the country. Hopefully these events we are seeing are short term. If the economy recovers, your investments would recover and probably even do better. Okay, so if you don't need your money urgently for anything, I don't think you should go for it. If you do, we are all going to even be worse off.
There are those who have already started saying that the cedi is showing some appreciation against the dollar. It means that there are brighter times ahead for the Ghanaian economy. With the onset of this program, despite its negative effects, can this program get us to the brighter times that we want?
Well, I think it's a first step. Okay, if we are able to reduce our debt to a level that is sustainable, and not just that, because we've seen debt reduction in the past. When we went for HIPIC, our debt came down, but we've borrowed our way into a crisis again. Okay, so even if this program goes through, we get an IMF support and we get some money from the IMF, we should still be fiscally disciplined. Other than that, 5 years down the line, we're back to the same conversation.
There's this
Again, corruption. Okay. A lot of the money that the state loses is through corruption.
Can we, I mean, the conceptualized point from Dr. Acquah that even if it's possible,
Yes.
can we do away with the IMF program and look within and find solutions? Is it possible?
It may be possible, but I think Charles Ho's, I don't think his views are wrong, but they are more, I don't know how to put it, maybe socialist in orientation.
Okay.
Right now, in market-based economies, it's more like a free market. You allow the market to function. Okay, he did mention restricting. You can do that, restricting capital outflows.
Yeah.
Okay, but in a modern market-based economy, that also has some implications. If investors then know that in the future, if I come, I can't go out, would they come in the first place?
Has it worked elsewhere?
It can work. There are different approaches to development.
Okay.
If you look at, for example, the path that China has taken, it's not a conventional, let me say, market-based economy. But
Yet it's yielding the results for them.
Exactly.
Okay.
Okay, but if you speak to somebody from the IMF, they will certainly disagree with.
Of course, I mean,
Charles, or even printing money also has.
Because we are doing this because of the IMF program, right?
Exactly.
That's what we are looking up to. There's a question about exactly, because we've been dealing all this while with the other side of the policies that's going to get us a very good deal here on the ways of getting money into the system. There are those who are saying we are pretending we don't know expenditure should show evidence of equally being reduced significantly. And that's an area too that we should look at. What can we do differently when it comes to expenditure?
I think so. So number one, we should make sure that the expenditure is for what it's for. There's a lot of leakage. Okay. Some of the contracts are awarded for political reasons. Some of the contracts are overpriced. And some government contracts will probably have 50% on top of what it should actually cost. Okay, so if you have more value for money, even without reducing, let me say, your programs, you could still execute these programs at a lower cost. And that gives you some fiscal space.
All right.
Okay, so one, being more efficient in the way we execute programs or government projects. I think, again, it's been said several times, the size of government is too large. We are a small country, 30 million people. We have how many parliamentarians, how many ministers? It's excessive. Okay, so that's another area in which we can reduce expenditure.
Reduce the size of government. They also make sure that we actually seal leakages anytime too. But why I mean, those of you who understand the finance to the proper levels, why are those not the major considerations on the table today? Why does it appear that it's only what can be spread in a way to affect everybody, including bringing untold hardship to people? That's what government's more interested in.
Well, it's a political economy.
Yes.
And there are a lot of invisible forces.
Yes, that actually
even the political party finance in itself is a contributory factor. Okay, because they close their eyes, but some of the leakages goes to party people so that they can fund
alternatives to dealing with the same.
Exactly, they can fund the election when we have the next election. So it's a very difficult situation.
There's a question. Will this domestic debt exchange program be the panacea to our current problems as a country, especially the debt problems? Will it fix it?
Hopefully in the short term, but it's not a long-term solution.
Okay.
So if we are able to reduce the debt to a more sustainable level, we are able to spend more efficiently, we are able to increase revenue generation, that should help. Right now we are men of straw.
Okay.
Okay, the government says they can't pay. Whatever you do, we can't pay. Okay, so it's become very apparent that some restructuring has to be done, but I think that they should consult more in terms of the nature and the structure of the restructuring. Like I said, I would have gone for a maturity extension, but because I don't have all the numbers, I don't know the impact of the present value of our debt, what that impact will be.
Okay.
Exactly.
Now, I'm ending on this point. You did mention this other alternative on the table about having to do with maturity extension and all the other ones. Is this something that can be done now, or it's too late? Because 19th is actually the deadline for the voluntary engagement here.
Well, I think it's not too late for the government to say, okay.
So we should extend the deadline.
Or maybe renegotiate with some of these, because it looks like it's coming from there are two parties here.
Yeah.
Both the government, which is borrowing, and the investors who have provided the funds. So it's good to talk to them.
Okay.
I don't think it's cast in stone. They can come back and say, okay, based on the comments we've received, we are deciding to...
My ministers are saying it's cast in stone, actually. They basically are saying that anyway.
Well, but is it the best approach? We don't know.
Prof, I am grateful to you for your time this
Maybe
evening.
one last thing
Yes.
I'll mention. There may be other ways to make sure that this works very well.
Like?
So number one, you have what we call credit enhancement. Okay, both for maybe the domestic and the foreign loans. We could have the African Development Bank provide a guarantee for the new debts. So that's one option. That will give investors confidence to accept this. Because the question is, if I accept this, am I confident that there will be no restructuring again in the future? Meaning I'm going to lose more money if the government is not fiscally disciplined. Okay, so a guarantee from, let's say, the African Development Bank will be helpful. Number two, maybe going forward, we should establish an African or a continental-wide financial stability fund, where in good times, African countries can pay premiums or monies into these funds. And during a crisis, that fund can be used to bail out countries that are suffering.
I'm grateful to you, sir, for your time once again. And folks, that's where we're in today's edition of UPfront. Many thanks to you for joining us.